For the next steps, go to knowhowtogo.
The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, welcome back to Commodity Classics. I'm Michael Yorba, your host. Thanks for joining us. My guest for the rest of this show is Jake Bernstein, and for this half of the show, we're going to talk about something that I've come up with, the Yorba TV FX Fund. Let's bring in Jake, and I'm going to walk through a few things. And Jake, I put together a portfolio back in February of 2005. A real money portfolio that's been trading the FX markets. You're familiar with the FX markets?
Yep.
Okay, well this, it's a carry trade portfolio that runs anywhere from, at bare minimum, say 3 to 20, and as of recently, I think I can go up to 26 different currency pairs simultaneously. I average about 15 currency pairs being traded simultaneously. So I just want to give you a little background. We've been running a segment on this every day this week, and today I'm going to give it a half an hour. But I'm glad you're on the show because you can ask me questions that occur to you as I walk through some of these different things that we do, okay?
Let's take a look. It's unrehearsed, so if I stumble, I'm sorry.
That's okay. In the previous shows, what we've done is I've got a population of 40 currency pairs, 26 of which pay enough interest to me for me to want to put them into the portfolio. Okay? And that interest minimum level is 20% a year in annualized interest income. And it runs up to as high as 254% interest a year.
So, Michael, the average overall would be what?
The average overall interest income on the currency pairs or whatever?
Yeah.
Okay, on the currency, I'm saying it's going to be maybe about 60, 70%.
Can't get that as First National yet.
No, it's pretty good. As a matter of fact, now you bring that up, what I did was I called the bank and I asked them, I said, well, what kind of interest can I get on a CD or a money market? And it's like, 100,000 minimum for a money market is 3%. Yeah, it's 3.85, and they cap it at I think it's just over 4%. I think the number was for a 5-year, with a 6-month penalty for early withdrawal. Right?
Yeah. Yep.
So I really saw a need for something that was liquid and diversified. Now let me cover the diversification. I'm running 15 currency pairs, and some are long the dollar, some are short the dollar, some have nothing to do with the dollar. But I've got, now we'll go into it, I'll take you into the platform. And I've got 15 pairs right there, Jake. I don't know if you can see this on your monitor.
I can.
Okay, and then I've got the money diversified in 12 countries, currencies. So when money's in the United States dollar, it's in euro, it's in Japanese yen, it's in Swiss franc. I'm going to move over here and drop these down a little bit so I can get you up to speed on what we're doing. Then it's in Mexican peso, South African rand, British pound, Indian rupee, and, let me move it a little bit more, Canadian dollar, Australian dollar, Turkish lira, and the New Zealand.
Okay.
Okay. Now, Jake, I started this account with $5 million. This is the demo account for a fund that I'm creating. This interest income has now moved, and let me get the right number. We're running at approximately 16.44% interest a year. I'm going to show you what the leverage is. This is the unrealized P&L of the floating balance, 90,000 and change. Really, it's not a big number, and I don't take this number to heart because the meat is the interest. Net asset value, and then here, as we go further down, we've got margin used. I used $532,000 out of the $5 million to control $14 million. So the leverage is 3 to 1.
Yeah.
Okay. What I'm going to show you, let's come back to me for a second. What I'm going to want to, so you got pretty much the ball picture, the ballpark?
Sure do.
Okay. So the real money account, Jake, that I've been trading since February 05 is getting 33% interest a year. Okay. So I wanted to create a fund that people can invest their money into, and while they're waiting for, let's say, a private deal that could pay them 15 to 1, or they don't see a good trade. So I'm going to work to see what I can do about cross-collateralizing it with either a security purchase or a futures purchase, or just take it out and put it into a private deal. Let's say you got some something that's about to do an IPO and you're the angel funder or something of that nature. Let's bring Jake in. I like it better when I can see him too.
Michael, what's the downside? What's the risk side of the equation?
Good question. So far, I haven't seen, if you keep the leverage low, 3 to 1, under 10 to 1. Max, I had it up to 8 to 1 at one period of time. The downside is I haven't seen it. I've lived through fluctuations, and you've seen some pretty good ones in the last 3 years. Quite frankly, the downside, it's complicated. It's sophisticated, and you do have to pay a little bit of attention to it if you're going to try this at home. That's the downside. It's very sophisticated. So up till now, the fluctuations really haven't gone much more than, in the beginning when I really didn't know how to trade this thing, 30%. Second year when I started to trade them, I didn't see anything more than a 10% fluctuation in the account balance. While I was earning an average last year of, I think it was just about a little over 28% interest on the account, with about a 48% net revenue, triple net profit.
That's great. Is it technically based? Any fundamentals involved, or purely technical?
There are fundamentals involved, but that doesn't involve the trading. That's just the underlying theory of why this works.
So does the person who is using this get the output from the computer? How does it actually work? What do you look at when you make your decision?
What do I look at when I'm making my...
In other words, you're going to put on a trade. What do you do?
Oh, well, first I look at all of the currency pairs and the populations and find out which one I'm going to want to trade with. In other words, is it paying me at least 20% a year? Then I look at the trend, the overall trend. Is it going in the direction that I need to be in order to receive the interest income? And I'm going to give you an example. As a matter of fact, I'll show you right now. Let's go back into the account. This is a chart of the U.S. Indian rupee. Okay, and in order to get a profit on this or to get interest on it, you have to short the U.S. dollar against the Indian rupee.
Right.
In other words, this thing's got to go down. So here we are. I shorted this market right there on May 26th after a tremendous rally. And I'm going to show
the rally indicating, Michael, dollar gaining on the rupee. Is that right?
Correct.
Okay.
Correct. And now what I'm going to do is I'm going to give you an idea of the technical analysis tools. I think that's where you're driving, right?
Right.
Okay. I'll run a simple 5, 20, 60, and you can't see it because it's in the middle of the marketplace, 100 period moving averages. All right, and I'll also run a fast stochastic, and this fast stochastic is a 5 with a 3 average. Let's see if I can get a picture of that. There you go. You see that? 5 and 3?
Yeah.
And then I'll run a classic 12, 26, 9 MACD. Give me a little trend indicator right now. And I'm going to try and expand this just a little bit so that we can get a better picture. And then what I'll do, just to give you an idea of possibly where I should short the market, because this is your question, and I want to get into something that we've got, I built out time for, I'm going to run a Fibonacci extension and see where I'm at. And then I'm going to run, let me get this, it's really difficult for me to see this. At this point right here, since I've got a turn and you can see that we're starting to sell, I've got a target. My first initial target is right here. If you run another extension, it'll stop right up here.
Okay.
Okay. So that gives you an idea of the methodology. But let's come back to me for a second, and so everybody can see Jake and myself. I'll run through all of these different currency pairs. Right now there's 15 of them. And I'll run through these very same steps all the way through it. And I don't know if you were able to see this, but there's also candlesticks involved in there.
Yeah, I can't see it really well, but I get the idea.
You got the idea. Okay. Well, let me walk you through what I was going to show people today, and that is this. Here's the interest income in it, so I can better describe the vehicle. You're getting money deposited into this account every single day, 7 days a week. All right? I'm going to show you, and here it says interest, U.S. South African Rand, $210 a day. And I'm going to show you something that really is interesting to me. Let me get the U.S. dollar. Okay, on May 29th, there was a deposit of $266 and change made from the money that's in the U.S. dollar. Okay, so if you got a pencil, just jot that down, 266.
Okay.
Okay, and let's go back one more day before that, and I'm going to show you what the interest deposit was on the previous day.
Okay.
212.
212. Okay.
Okay, now here's what happened. Let's come back to us. Jake, what happened is all of the interest from all of these currency pairs that have been deposited into the account are now earning interest in a compound fashion. Because at 2%.
So you're earning interest on interest, right?
Exactly.
Cool.
That's inherent in the system, in the portfolio. We're diversified, so if the U.S. dollar drops like 18% against the euro, I'm thinking the rest of these currency pairs, or this is after 3 years of doing it, are going to cover us and give us a nice equilibrium here.
Right.
Here's the fun part. This is where it gets really exciting. Now, ladies and gentlemen, if this is boring, I'm sorry, but for me to be able to compound interest in a fund that really doesn't fluctuate too much when catastrophes are all over us, to me, is exciting.
Michael, how can talking about money possibly be boring?
Not to you and I. We got some questions back up in the shout box, ladies and gentlemen. Don't worry, I'm not ignoring you. I'll get to it. All right. If we want to unitize this thing, let's say that you want to compound your interest faster than what you just saw happens inherently in the portfolio. We'll unitize it. Let's say that every position we put on is worth $50,000. How long does it take to earn interest? Let's say we did the Euro Turkey. It pays 223% interest a year. How many days does it take to develop enough interest to equal $50,000 and then take that $50,000 worth of interest and put it back into the Euro Turkey at 223% interest instead of wait for the 2% you're getting on the U.S. dollar in the balance? Well, it's 141 days at 3-to-1 leverage.
Right.
So every 141 days, now remember, the leverage is declining as the balance is increasing in the portfolio.
Right, right.
All right. Ladies and gentlemen, we've got to go to commercial, but on the other side of this commercial, I'm going to walk you through the compound interest schedule that goes into this fund, okay? All right, Jake, stick with me. We'll be right back and go into it.
Okay.
All right, be right back after this.